Welcome back. You're watching Market Fatafat on ET now. Let's keep it going with all the stocks buzzing in trade. More like falling in trade today. But yes, on the back of news flows, technicals. And on the technicals, we're joined by Aditya Arora today. While, obviously research team, we have Ashesha as well as Ankita continuing with us as well. Let's keep it going and talk about ITC then. Some bit of a green, at least it was holding on into the morning day as well. And, because we've already seen the fall coming in. Finally, what everyone was talking about, the batch stake sale that happened, 3.5% is what batch sold. Now they'll be holding 25.5% stake in the company. The value of that is at around 16,690 crores is what we have spoken about, is what they have sold, that 3.5% stake. So yes, that is what was, waited out for in terms of for ITC, and that is why in the last couple of days when you look at it, ITC had seen a fall as well. As of now, whether you look at Morgan Stanley or Goldman Sachs or any of the brokerages, they are maintaining their rating. So Morgan Stanley is maintaining their overweight rating, target price of 491 rupees. They see that, it's not much of a concern. This overhang kind of a thing was there because of the batch stake sale. There's a lot of demand that is there for ITC still that they see, and now they believe that that is going to see a turnaround, and again the stock will start performing well. Today, we saw an intraday up move of almost 8% in the morning as well. Now settled at 5%, and in such a market managing to hold on to 5%. So surely getting in some traction there. Goldman Sachs too is maintaining the buy and a target price of 480, and they believe valuations are still, when you look at it, it's far away from its peak levels as well, 5-year peak as well. So yes, still not too expensive compared to other FMCG companies as well, and ITC continues to be in focus.
Absolutely. Now it will be very crucial to watch out for ITC very closely today. Not only today, I'm sure it is going to be in focus tomorrow as well, Vinny, because the name of the buyers in this block deal will be disclosed.
This evening that we'll be waiting out for that. Finally, who's coming in?
You will be waiting out for that. But Aditya, let me ask you, what should investors do? Should they be also waiting to enter ITC, or you think now is the time they can take the plunge? That overhang is out of the way. ITC has done exceedingly well for itself over the last 1.5 years or so. What's your take?
Very good, Noor. I think absolutely they should take a plunge now, because other market stocks, other market participants, other peer stocks are actually plunging, but this stock is standing strong in such a weak market. So I think it's a good buy at this point in time. They can buy at 425, and they must maintain a stop loss of 400 and target must be 450. So ITC is returning back to its glory days after a correction and consolidation of 9 months. I think today's day is a game changer for ITC.
All right, so that is ITC for you. Let's talk about Max Healthcare, and that particular counter is under pressure like the rest of the market. But one of the news peg also that could be likely weighing on the stock is the fact that small cap world fund has sold about 19.51 million shares, which translates to 2.02% stake in Max Healthcare via the open market on Monday, and this is as per the stock exchange filing. Post the share sale, now small cap world funds stake in Max Health Institute has actually now reduced to 4.9% from earlier 6.92%, and that's the reason why you can see the stock anyways is falling in trade. It is now near its day's lowest, 0.3% down to coming in for Max Healthcare, and that's the news piece.
Okay, let's move on to the next talk on the technicals, and Aditya, you're going to talk to us about APL Apollo. When you look at APL Apollo in the last 1 month, we've already seen 18% returns. That up move that has started for the company in the last 1 month specifically. What's the view now on APL Apollo? Do you think this run-up is something that will continue for this?
Yes, I think the run-up may continue because metal counters, steel counters are actually beneficiary in times when DXY is correcting. And we have seen DXY correct a significant bit in last 1 and 2 months. And the patterns are such that DXY will correct further. We are going to see rate reductions. So I think in that scenario, DXY corrects, and metal counters are going to be a big beneficiary over here. And on technical front also, the patterns are encouraging. And even you look at today's price, then they are showing it is showing relative strength compared to the market, which is actually down 10%. Individual stocks are down 10%, and this is holding up very properly. So I think it's a good candidate at this point in time, and the upside may continue.
All right, let's move on and let's talk about Sterling and Wilson. Ashesha, this particular counter is back again in focus. Yesterday also we were watching out for the stock closely, isn't it?
Yes, the stock is locked in lower circuit for the second consecutive session. We had some reports yesterday which said that promoter Shapoorji Pallonji Group is looking to sell its stake in the company. They currently hold about 12.75% stake in the company. The company, however, went ahead and clarified to exchanges that this news is false and baseless, and that reports about promoter selling its stake in the company is completely incorrect. But despite the clarification that has come in from the company, the stock continues to remain under focus, locked in lower circuit for the second consecutive session.
Let's move on, talk about Allcargo Logistics then. And Ankita, why is this one in focus today?
Well, yes, Allcargo Logistics is in focus today on the back of the monthly operation updates that are coming in now. When if you look at the LCL volumes, the less than container load, the volume for the month of February 2024 have witnessed an increase of 7% as compared to last year, which on a year-on-year basis. But it is on the month-on-month basis, the sequential basis, where the decline is really coming in. And the February volume was down 14% than the January volumes and 5% lower than the previous month. The FCL volumes, which is the full container load volumes, were down on a year-on-year basis and also on a sequential basis. We did see a decline coming in there, and on the back of back of this sequential decline that we saw coming in the volumes, we see Allcargo Logistics actually taking a sharp knock in trade today. It's down 7.5% in trade today.
There's Allcargo Logistics for you, that is in focus. But Aditya, let's talk about Tata Steel, and how is this one looking to you on the charts, because metal counters are also under pressure with the rest of the market. 4.9% down to coming in for Tata Steel. But if you look at the charts for medium to long term, do you think Tata Steel is a better space to be in?
Absolutely. Tata Steel actually made a new 52-week high 1 or 2 weeks back. So that itself is a very good sign technically that buyers are pretty aggressive and sellers are becoming little weak. Although market is so brutal today and since last few days, hence the stock has corrected quite a bit. But I think there's a long way to go on the upside, because fundamentals for steel counters is improving, and Tata Steel has important support at 140 levels, 145 levels. So this itself is an accumulation zone, not a level but accumulation zone. So I think it's a good candidate over here.
Alright, so that's the take coming in on Tata Steel. But on that note, we'll slip into a break on this edition of Market Fatafat. When we come back, we'll continue taking all of his stocks. Don't go anywhere.
Welcome back. You're watching Market Fatafat on ET now. Let's keep it going with the stocks that are buzzing in trade. And on the technicals, Aditya, you have picked out for us Cipla today. In terms of the pharma pack, do you think Cipla will be a performer that will come in terms of a good move that one could expect? Today the stock is down and out. 6 months or so, nothing exciting that has happened for Cipla, right? So what do you expect in terms of the move now?
In such a market, I'm looking for less of excitement and looking more of defense and safety. Because every 9 out of 10 stocks are falling. So it's a very good idea to be in defensive counters and not lose the chips when the markets are so brutal. So in that context, Cipla looks very good. And when the tide turns, I think pharma counters can do well. Although they are less, they have low beta compared to other stocks, but they help you in some manner when the fall is exaggerated. So Cipla looks good at this point in time at 1458, and stop loss must be 1400 and target must be 1500.
Alright, so that's the take coming in on Cipla, and that's Aditya's views coming in on that particular counter. But Century Textiles, Ashesha, why is this one in focus? And I don't think the focus this time was on their core business of Century Textiles, isn't it? They're talking about real estate.
Some important management commentary that has come in. The stock, of course, is declining in trade, nearly 8.5% lower as we speak. The company said that they aspire to be one of India's top 3 developers. They have about 45,000 crores of project pipeline across 4 metro cities. They foresee rapid growth in sales across India as far as their real estate foray is concerned. Several planned commercial developments is what the company has spoken about. Legacy paper business provides steady cash flow. They generate about 300 to 400 crores per annum from this legacy business, which they will use to grow their realty business. The company also aims to shut down its textile business, and the company says that borrowing cost for realty business is about 8%, which is much lower than several other small and mid-sized property companies. So very positive management commentary that has come in, especially with respect to foray in the real estate business and shutting down its textile business. The stock, of course, in line with broader markets, is declining nearly 8.5% lower in trade.
Okay, let's move on, talk about the next stock on the technicals. And Aditya, you picked out Havells for us. What's the view in terms of the charts that you have for Havells when you look at it? Obviously, in the last 1 month, 8% returns is what it's managed to give. Last 6 months is something that is subdued, but last 1 month especially that pickup has come in. So what's the view now that one could have on Havells?
Right. So in consumer durable basket, I think it's actually showing outperformance compared to other market pairs. So Havells is very good candidate in that basket. I think technically this is the accumulation zone at 1450, 1480 is the accumulation zone. In this price range, the stock must be accumulated, and stop loss must be 1390, and target must be 1550 to 1600.
So that's the take coming in on Havells, the targets that you need to watch out for. No doubt, Vinny, the markets are falling. In fact, sharper fall coming in. Small cap index down 5%. We are at the day's lowest point coming in for the broader markets. But despite that, you had one stock that actually listed on the bourses.
Absolutely. Today we did have JG Chemicals which listed on the bourses as well. So let's open up the charts for that right now. And seems like obviously given that the markets, how they have been as well, nothing exciting that has come in terms of listings, right? Even yesterday, this week, whatever listings we've seen has been quite subdued, subtle, because the markets are such as well.
Right.
And JG Chemicals also nothing exciting. We were not expecting some sort of a bumper listing opening also, but yes, discount is at
a discount of about 1 to 2%.
But now it's the fall is just intensified. Not a good day, maybe, I think, coming in there. But yes, JG Chemicals making a debut on the D Street. We should be watching out for this moving forward as well.
Hopefully brighter days will come in soon for this one. But Aditya, Infosys, brighter days will come in for Infosys as well. I believe Infosys is making good moves over the last 2 to 3 weeks only. What's your take coming in for this particular counter now?
I think brighter days are ahead for our IT counters and also specifically Infosys. If you look at Nasdaq, it was plus 1.5%. Our market is not working in sync with global markets, but although this price shock is on basis of certain restrictions on mutual fund participants and certain restrictions in mutual fund industry, if you look at institution data, then that is also not so bearish. So the kind of fall which we are seeing may revert back, may do some mean reversion. In that case, I think IT counters will do well. Nasdaq did well yesterday, and I think the positive sentiment spillover may happen in Indian market also. So patterns of Infosys are pretty solid. It could be accumulated at these levels of 1606 to 1580 kind of levels, and stop loss must be maintained at 1550 and target must be 1650 to 1700.
That's the view there, but let's pull up the Nifty as well. Below the 22,000 level is what the Nifty is gone as well. It was testing it around those levels, but now, comfortably gone below that level, one could say. 21,968 it is what is trading at. The day's lowest point, 1.64% decline in the Nifty. Let's pull up, even the broader markets that we were seeing as well, what's happening on that front. And nothing exciting over there as well. Like Cheryl mentioned a short while ago as well, the day's lowest point is what we are seeing in the broader markets as well. I want to pull up some of the names that one could say is holding on in terms of the day's lowest point, or what we could see is the Adani names in the Nifty 50 are all down and out as well. We have Coal India that's seeing clear pressure, Power Grid, NTPC, Tata Steel, ONGC. So metal pack clearly a bit more under pressure as well as of now. So yes, that's how the market is looking like. Just seeing a sharper fall continuing for the day as well. But I think we should continue with more stocks then. And NBFC's Ashesha, what's this whole pack doing today? Why is it in focus?
Yes, NBFC counter is in focus today, and this is on account of a cautious note that came in from Nomura this morning, where they say growth continues to remain at risk. They say FY25 is expected to be a reset year for the sector. They reiterate their cautious stance on NBFCs, especially the small and mid-tier NBFCs. So for credit access, they are maintaining their buy stance, but they've gone ahead and cut their target price to 1550 from their earlier target price of 1990. For Bajaj Finance, maintaining their buy, target price revised lower to about 7,200. For Shriram Finance, they've hiked their target price marginally to 2,900, and 5-star business also, they've cut their target price to 880 from 900. The entire counter in focus on account of this note that has come in from Nomura.
Alright, that's the note coming in from Nomura, but yes, the markets are not looking in a good position at this point in time. But with that, we are totally out of time in this edition.
Nifty Bank also, I think we should just mark below that 47,000 mark as well again. But yeah, on that note, it's time to maybe just say goodbye. And thank you so much for tuning into ET Now.